S&P 500 whales keep adding puts. This entire new rally that we've kind of had this week, you can see over here 3.7 million worth in premium for out the money strike, the 651 strike in this case for December expiration. It's about a month until these expire, as well as this $5.3 million one for 651 as well. We saw that early on in the session, followed by about at the money at this 685 for the March expiration, 2.2 million in premium. So still a significant amount of these puts hitting the tape, and we saw in previous days as well. Like I just mentioned, if we go back over to here, we can see for ourselves actually 79.7% puts to 20.3% calls if you filter for over 500,000 in premium, just to see what whales are doing. And not many calls, all things considered. You could see earlier today 1.7 million for a pretty aggressive 670 strike that expires same month. So a lot of these are becoming a lot more aggressive. We're starting to see more consistency, some 640s from earlier in the week over here during that uptrend. So very interesting to see that. If we go over to the chart, we can notice here that we did have that very nice upside move throughout this week. And if you remember from the Sunday video, I mentioned I was looking for some type of an upside move to short. And so far, bulls have actually surpassed that 680 level that I mentioned in that previous video. So what I'm looking at right now is personally shorting this to go back down to the trend line, the uptrend that we did retest over here and was able to reclaim on the daily and the weekly with this a nice rally to close above. And honestly, if we do retest this again in the short term, especially this month in November, you're probably going to see something like a mini bounce and then a flush under that. So that's what I'm looking for. The risk in this case is a fill of this gap up here. And the reason why that I circled it in the previous video is because this is the first gap down that we had in a sequence of 4 major gap downs. And this shows a lot of bearish momentum until this gap is filled in the future, which is why I'm so interested in using it as a stop loss in this case, just because this was the start, like I said, of all these gap downs, which characteristically is a sign of bearish momentum, especially coming off of 3 gap ups. You can see over here, we had a gap up here, and another gap up here that did fill, but 3 gap ups in a row, followed by numerous gap downs, typically is a sign of bullish exhaustion. So as long as we remain below the initial gap down, like I just mentioned, there is more of a bearish bias, despite what we have now seen this week of 3 upside days, or at least 2 upside days, and then some chop from today. So I want to make that clear, just because we have seen a lot of put flow throughout this entire week. We've saw what happened before over here with these gap downs, which characteristically is bearish momentum. And now we also know that there is good risk reward as well. For example, if we were to just use something as basic as a short position here, from where the close was, you're looking at about 4 or so points of risk on the S&P 500 for potential. Honestly, I could see this going much lower than the previous low was over here, like back into the 650s. You're looking at potential like 25 or so points. Pretty good risk reward. That's like a 1 to 5, 1 to 6 risk reward, all things considered, on a potential short setup when you know that this gap close over here is the potential risk. So wanted to make that clear in this video, mainly because it's been very bullish in terms of flow and structure, especially coming out of the summer months into the fall. Characteristically, the fall is typically bearish, but we just did not see any type of confirmation. I'd characterize this to be more so confirmation. So that is what I'm looking at for this week and kind of for the rest of the month right now. And it's great to see that complementing put flow. So good risk reward in this case. Just wanted to bring that to your attention. Also, something else I want to bring to your attention is some of the insane dark pool prints we've seen in the past week. For example, 2.3 billion over here at the 683.05 level, 2.5 billion here at the 682.67 level, and then starts to get even crazier. If we scroll down here, 3.7 plus 1.9 billion in premium. So you're looking at well over 5 billion in premium in this case at the 677.50 level. If you scroll down, you can see 2.6 billion at the 670. So there's a lot of activity around this area overall, specifically 677.50, as well as around these 683 or so level. So this is very interesting to me, mainly because we just did not see much activity at all in the fall, which typically is the case. Especially September is normally one of the biggest months in terms of overall premium in the dark pools. And now we're starting to see it more so in November. And now we're starting to see it more so at all-time highs, which is very interesting, especially if these levels are unable to hold. It's going to be something you want to watch for. Starting to see potential signs of distribution around 683, 682 with these prints. You want to see it crack below definitely this 677.50 level if you are bear. Otherwise, bulls will continue to bid off this level. So this is kind of what I'm using right now as more confirmation that a new down leg has started, this 677.50 level. So mark it on your charts, definitely unusual. Anything over 5 billion, something you always want to mark on your charts just because it is rare. And then lastly with SPY here, before I go over to some other tickers, you can see based on gamma, actually not as much exposure as we had over the weekend, but spot price for the close, almost $1 billion at the 684 level. And then at 690 starting to get some decent exposure, 1.3 billion in premium over there. So that could act as a magnet if we see some type of a gap up, kind of pull towards this level thereafter. But this is kind of where the main exposure is right now. Nothing super insane. Like I think it was 4 billion over the weekend at certain levels. So nothing that's going to act like an insane magnet for the time being. So I wanted to mention that. And another thing I want to mention is Cisco stock, which this is not something that I typically would talk about, but it seems like there was a blatant insider trade on this one ahead of earnings. And honestly, there's a couple reasons for that. Not only did they post this on the Cheddar Flow account, this print, super unusual print, by the way, that hit the tape yesterday, and it was very short dated, so clearly an earnings bet, but also look at this run up today. There was a very clear run up on a day that tech was mostly dormant, like it was trading sideways. So clearly there was a lot of interest going into this earnings, and it was up. Like, for example, these calls were up 75% by the close before earnings. And then look at what happened here during earnings. They blew earnings out of the water, and it just continued to go up and pumped after hours. And right now, we'd actually see here, it's up 5.5% after hours, which those calls are going to be well over a double by tomorrow morning, assuming that this is able to hold after the conference call. So very clear insider trade on not only their part, but potentially other people knew about this as well, just based on how price moved, because this is a 2 to 3% move intraday on a stock that, let's look at the market cap over here. We're looking at a market cap of about 300 billion, and it was moving that much before earnings. And we saw these unusual prints the day before for short dated print, as well as a lot of size behind it relative to what Cisco typically gets. So a lot of warning bells on this one. We've seen a lot of insider trades this year, so it seems like this is the case as well. So yet another one here to show you guys that we've seen. Definitely always good to look at any of these highly unusual prints that come through, especially ahead of big events. So wanted to bring that to your attention, as well as one final thing are these Google prints here. And before I get into that, you can use the code SAVE15 to get 15% off of a Cheddar Flow subscription after your 7-day free trial. So you can see prints like these and the Cisco one as they hit the tape real time. So after your free trial, you get 50% off. You could cancel during the free trial if you don't like it. Otherwise, you'll get that benefit. Now going into Google here, you can see 2.1 million in premium and 7.2 million in premium, almost 10 million in premium for these about in the money puts for the December 19th expiration. These are highly unusual. They were bought to open. You can see volume here is over the existing open interest. You can also see in order details, for example, all these were executed at the ask and volume significantly over open interest, like I just mentioned. So clearly a lot of interest in puts on this one from today. Spot price was 288. So if we go to the chart here, they decided to add those puts as it was falling down within the initial 15 or so minutes of the session today. You can see this candle. This is the first 15-minute candle today. And they started to add as it fell down. And so far they are up based on the close. But this is one of those prints, especially with the size on it, that you typically are going to see continuation to. So I looked at this one also because S&P 500, if I expect it to fall down, you'd expect tech to fall down with it, at least in the near term. So something like this has potential to fall from here. And I've been a Google bull for honestly all of this year, since February when I started to buy the dip between February and March. And now based on flow like that and potentially a structure where we see distribution in this entire range, there's a potential for it to fall. So what I'm looking at right now is risk of something up here. You could use it as a supply zone instead of just a hard level, but about 291.50 or so works as a good level. The inverse, or I guess the complement rather, to this would be using all of this up here as a supply zone, since that's what it is, and using that as your risk with an hourly close above as the risk, in this case with downside of not only this demand zone over here, so it can go down to around like 276, maybe 275, but maybe trim around this level and then a break down below. You could see it go much lower. I'm talking like 260s, 260 lows because of this all acting as distribution. So it's potential. That's what the whale is looking for. They don't have as much time on it, so definitely expecting something quicker here on their part. But in this case, risk reward is not bad. You're looking at about 4 or 5 points of potential risk. For it to go at minimum 10 of downside to go to the lower end of this range. Potentially runners can go much lower. So this is something that I'm watching. I haven't initiated a position yet. Wanted to bring it to your attention, but could be a potential position to add either tomorrow or Friday, assuming we don't have that breakout above, because as of now it is acting as a double top with that supply zone. So good risk here. Obviously would be more so contingent on the SPY 100 also falling, which is again my expectation here. Good risk reward on both of those for shorts. Doesn't mean it has to happen, but I'm always looking for the most optimal entry positions, and both of these are providing it. Plus you get that nice complementing factor with the flow. So wanted to mention all of that. And I guess one final thing I could do is give you guys a Bitcoin update. So you guys know I'm looking for more upside in this one. As of now, it has held the key level that I wanted it to hold, which is that low that formed over here on November 3rd. And right now, ideally, it will form a higher low around this range, ideally today, this low that formed here. So around 100,000, 101,000, you want to see a higher low form. And then that means that a new uptrend has been established in the short term. And you can see some continuation upwards of 115,000, 116,000 bare minimum, assuming again that this higher low can form. So still interested in this one. Also, I mentioned in the weekly video MSTR, since I think this one is attempting to form a bottom, it actually came down to retest the bottom. So you want to see a double bottom around here just because of this bottom print of a candle that we had over here. So you want to see these lows hold still for it to continue higher. But if Bitcoin can form a higher low here, then you'd assume MSTR can also establish some type of continuation as well. So still looking at those, they're pretty stretched to their extreme, all things considered. Considering that under 220, 219 here would be a failure for MSTR, and then under about 97, 96,000 here on Bitcoin would also be a failure of the entire macro structure. So it really stretched itself to the breaking point, or at least close to it here. So you really want to see a reversal if you are bullish on crypto, as I am right now. So that is all for me today. As always, appreciate you guys watching this video. I'll see you next time.